This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. You know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi everyone, this is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Saturday, August 19th, 2018, and this week we'll be looking at the best dividend stock to buy right now. On our opening slide, it's called the setup and the approach, and the key objective is to present to you a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks. So the view you're getting is not driven by some sensational headline in some popular publication focused on increasing readership, but simply based on the best investment opportunity we could find for you. Now, an easy way of thinking about approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly viewed creating such a model as daunting, but I believed I was well prepared for the challenge. I have computer programming experience and years of finance experience to judge the research that I reviewed. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections they share with the public. A point worth remembering is that these views are based on today, an unforeseen economic report, a regional conflict, a revised policy change can change these expectations tomorrow. And now, so what did our model find for you this week? We found that the best dividend stock to buy right now is in the tobacco industry. On to the next slide, it's the industry overview. The tobacco industry is comprised of internationally publicly listed companies. Here are the 10 largest competitors by market cap. Some of the names are a bit of a surprise to me, but here we go. Phillip Morris, Altera Group, British American Tobacco, SiteOne Landscape Supply, Vector Group, Cal-Maine Foods, Fresh Del Monte, Brightview Holdings, Calivo Growers, and Universal Corporation. Now, the growth drivers are pretty straightforward. There's strong domestic GDP growth in the United States, Europe, and Asia. And the other growth driver is the emergence and sales of these tobacco companies reduced risk products. You may have been hearing about these smokeless cigarettes, these electronic cigarettes, where the tobacco is heated to a high degree but not burned. The industry challenges for the tobacco industry: slowing global sales of cigarettes, rules limiting nicotine concentrations in products, the reduced risk products not selling as fast as projected, and the early stages of pushback on flavored tobacco products. On to the next slide, we see that the best dividend stock to buy right now we've identified to be a company called Phillip Morris. Ticker symbol is PM, and we see the 6-month upside potential at 20%. On to the quick facts slide. Phillip Morris International manufactures, sells, and distributes a wide range of tobacco products in markets outside the United States. The company's operations are based in Lausanne, Switzerland. Brands include Marlboro, Phillip Morris, Chesterfield, and Parliament. Here's the 2017 operating profit breakdown from the European Union, 32%. From Eastern Europe, Middle East, and Africa, 24%. From Asia, 35%. And from North America, 8.5%. The company has 53 factories and 80,600 employees in various international markets. Phillip Morris is headquartered in New York, New York. And the company was officially founded in 1987, though their origins, if I remember correctly, go back to the late 1800s. On to the next slide. It's called the metric slide. The annual revenue of the last 12 months for Phillip Morris was $30.4 billion, so it's a very large company. The net income over the last 12 months was $6.4 billion. And the cash flow from operations over the last 12 months was $10.2 billion. This is a very large and sizable company. The operating margins for 2018 are tracking to be 16.0%. And in 2019, they're expected to be ever so slightly better at 16.5%. On to the valuation metrics. The trailing PE ratio for Phillip Morris right now stands at 17.2, and the forward PE ratio stands at 15.3, and that implies that earnings are expected to increase. The PEG ratio stands at 2.0. The price to sales ratio is at 4.3, and the enterprise value to EBITDA ratio is at 12.1. And the dividend yield for the company is a very healthy 5.6%. The average dividend payout ratio for the firm is 90%. They pay a very high percentage of their earnings out as dividends every year. On to the next slide. It's the chart for Phillip Morris. Phillip Morris's stock price has pulled back from a year ago, price around $115 to where it is now, around $84, $85. There was a strong pullback in late April. Stock price pullback in late April was due to a declining product sales in Phillip Morris's largest market, Japan, and also the sale of the alternative products, the reduced risk products we mentioned earlier, was less than expected. On to the next slide. We call it the looking back and looking forward. Looking back, the company has been seeking new areas for growth as cigarette volumes decline. The company is pushing an electronic cigarette, what they call a reduced risk product, using heat instead of combustion of tobacco, which is believed to be less harmful. Most electronic cigarette sales are in Asia at 12% of global sales. The U.S. is believed to be a high potential market, although Phillip Morris doesn't operate in the U.S. However, it does have a licensing agreement with Altria, which does operate in the United States. And European regulators have been opposing the marketing of electronic cigarettes, placing a headwind on its growth. Now, looking forward, the company has experienced a recent 18% stock price pullback due to disappointing electronic cigarette sales, though those sales are still increasing. The company seems to be facing some resistance from older smokers to the new electronic cigarettes. Competition is increasing in this reduced risk product market. The stock pullback has led to an attractive and inexpensive stock price while offering a very strong dividend coupled with a strong balance sheet. The company recently increased its dividend again for its 11th consecutive year of dividend increases. On to the next slide, the why now, the bull rationale. And there's a few reasons why the stock appears attractive. Increasing sales and revenue per share over the next 2 years. The company has low valuation metrics. Valuation metrics are historically low right now and are expected to be so in the near future. And the company is buying back its stock. And, share buybacks tend to push a stock price up. So, increasing sales and revenues per share, low valuation metrics right now and in the future, and share buybacks. On to the summary slide. The financial statement quality of Phillip Morris is very good, so there shouldn't be any concern about it changing its dividend outlook or dividend payments. The net profit trend is improving. The price pattern trend, as we've already noted, is negative, although we expect that to turn around. The industry outlook is positive. While tobacco products are not healthy products, they are still selling globally. The overall market outlook is positive. GDP growth is optimistic for the rest of the year as well as in the next year. The recent closing price for Phillip Morris was $86.30, and our 6-month price target is $103.82. And this gives the stock a 6-month upside potential of 20% in addition to paying a very healthy dividend of over 5%. So it's for all these reasons that we believe that Phillip Morris is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Conner Management Group. Conner Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connermg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right, have a good week.